All right, we are live. Good day, my crypto friends. Welcome to the EOS Podcast. Today we have for you Domenic, the CEO and co-founder of WORBLI, and also Mitch, who's the network operations manager at WORBLI. And if you guys haven't dug into WORBLI yet, this is going to be a really interesting podcast and show for you because well, you guys are doing huge things. I mean, when you told me you were busy, I said, yeah, it must be rough trying to change the entire financial industry in one kind of foul swoop here. So let's start digging into what you guys are up to with WORBLI. And why don't you just kind of give a 30,000 foot overview for us, Dom, about what WORBLI is and what you guys are trying to do.
Yeah, so WORBLI is the financial services district of EOS is what we're calling ourselves. So we're a sister chain of the EOS mainnet, and we're bringing full financial compliance to the blockchain at the user account level. So users can choose to opt in, they can go through our AML KYC process. And what that does is it really allows financial services businesses that require compliance and licensure and all that stuff to really build businesses on the blockchain and know that they have a compliant network to do it. And so we consider ourselves kind of an intermediary step between a fully public, decentralized blockchain and we'll say a completely private and permissioned closed blockchain, right? Like Corda or something like that. And so we're trying to create that opportunity where developers can build applications and enterprise businesses can get on the blockchain, and we can bring all these services to the blockchain community.
Yeah, and that's what when it finally kind of clicked for me was when I realized that at the genesis of these wallets for WORBLI, people have the opportunity to do AML and KYC and have an account that belongs to them, but that is also for global financial institutions. It gives them something to kind of hold on to so that you can build regulations around it, so that it makes more sense to institutions. And yeah, so that's a big step there. When's that going to start? When's that process actually going to start? How far off are you guys on that?
So November 1st, we're launching our Sharedrop portal, and that's when mainnet folks can come over, open a WORBLI account, claim their tokens. So we're doing a one-to-one. Our snapshot was September 7th. We chose to use that because we thought it was a little more accurate. You know, we're several months post-launch, and we just didn't think the Genesis snapshot made sense. So people will be able to come over, open an account. Definitely want to clarify, you do not have to do AML KYC right away if you don't want to. It is required to unlock 35% of your tokens, but you'll have up to at least 6 months to do that. So if you want to wait until you see Dapps on chain, which there will be in that time period that require it, and then you want to do it so that you can sign up for that Dapp, you'll have that option. You can have an account on chain without it, but you're not going to have access to the Dapps that require that level of compliance. But as you said too, your data will be yours. You decide whether or not you even want to share whether you're AML KYC verified with a Dapp. It's about user control and all that stuff. So November 1st and the AML KYC feature will be in there.
Yeah, and that's that's something that a lot of people worry about is, oh, I don't want to put people don't want to do AML KYC, but especially with something like WORBLI, where this is going to be, you're basically going to be kind of, they're going to be controlling their own identity on chain, and then they have the option whether to let the institutions see that they're basically verified. It doesn't mean that they give their information out to the institutions. And the interesting concept about identity is that our identity is already out there. It's just a one-way street. Our identity's out there. We just don't know who has it or what they're doing with it. So, right. This kind of thought of trying to now protect our identity when we can actually have control of it, and it can be something useful. It's like, it's too late in the game to be worried about that now. Now it's kind of, for me, my thought is that it's already out there. Now I want to put it out there in ways like this where I actually have control over it and what it does. So, for me, the KYC AML isn't a big deal personally. And it gives transparency on the other end. Now we can see what is going on in the entire blockchain, which is we're in the dark in the normal financial industry. So it's a big difference there. So.
Yeah, I think that's a key point. You know, so many folks have done AML KYC. I mean, if you have a bank account, you've done AML KYC.
Exactly.
And again, you don't have any control over that information. Most of those banks are actually selling your data, selling your information. You know, Google, by opening an email, they may not have the total of AML KYC, but they have information about you. They have a lot more information that's far more valuable and potentially damaging, which is your activity, you know? So, you know, we're not recording that stuff. You're going to own it. You're going to decide who gets it. And we just feel like blockchain's getting regulated whether we like it or not at some point. And so we can take the lead and start kind of self-regulating in the way that we think it should be done and hopefully provide a template, or we can wait to get regulated. And so we're just trying to be ahead of that curve.
So with WORBLI, it's basically, you called it a sister chain to EOS. Is that right? What's that kind of look like to token holders? Would you consider EOS a complementary chain? Is it kind of something that helps out? Is it competitive? How does that look in kind of the competition landscape?
Yeah, we don't see that there's any competition. It's a value add. You know, you're not going to be able to do what we're doing on mainnet. You know, we looked at it. If we had thought that we could have created a bank and some crypto fiat gateways and some of the other stuff on our roadmap and just done that on EOS, we absolutely would have. It's a shorter road. You don't have to gather all the block producer support that we've had to work on. You know, you don't have to spin up a chain. You don't have to absorb all of the cost and legwork of the last several months that we've put in just to spin up a chain. Because when people think about, yeah, the EOS IO software is open source, but you know, and you could go run a node as a developer and you technically are running a blockchain, you know, but that's not really a network, right? Yeah. You're not going to get a bunch of users signing up on your network and using your network just because you spun something up on your laptop, you know. You need computing power, you need resources, you need legitimacy, you know, you need trust. And so it's a lot of work to do it, but we did it because it's required, because compliance has to be at every layer. You can't go to a government agency and say, oh, our Dapps are really compliant. And then they go, yeah, but what about the nodes on the network? What about the user accounts? Like, all of this stuff has to be compliant all the way through to our fundraising and how we got the project off the ground. You know, if there's any problems in those areas, you're not gonna get through. You're gonna get flagged and you're gonna get fined and probably not gonna be around very long. So we are not competitive. We're trying to bring these services to the blockchain through the EOS software. We think it raises the visibility of EOS and shows its capability, what it can do, the transaction speed, all of the awesome features that we all know EOS contains. And in the end, we know that IBC is on Block One's roadmap so that the chains can communicate. You know, I think people forget that Dan talked about this was always part of his vision.
Yeah.
Very different chains all having some specific features. You know, even some people may be launching like a small community chain for their like town, right? Where they might just have like their town government on it, you know? That's probably not something they're going to want to put on mainnet. It's not going to make a lot of sense. They're going to need some rules. And that might be a side chain, and that's an opportunity too, but compliance has to be at every layer. And we knew we couldn't control that. For example, we would have had to say, no block producers can be on the chain who don't go through corporate AML KYC.
Yeah.
How would we do that on mainnet?
Yeah.
Right? It's not possible.
Yeah. That's when you think of it that way, and having to have every single part of this basically audited or auditable by global financial institutions. I mean, you're setting the bar really high for yourself. As far as where the money goes, how it was, you know, collected and all of that. So that's, you know, that isn't something that's going to be done on the EOS mainnet. It's clearly a financial niche. He's following that many, that many regulations. So that's going to be big, bringing on these institutions. And the other thing you said was, about creating a network. You can't just launch these chains or you can just launch them, but creating a legitimate network, a network takes, you know, a group of people. It's a story that a lot of people have to be telling themselves and believe in and get behind and then put effort into kind of, so it's just building that. You guys have put months into kind of building this network. So on that note, with the block producers, how are they added? How are they chosen? How will they play out in the future? Is it the same as the EOS net?
No. So, we didn't have any voting. Block producers were selected based on the development of relationships over the past 9 months, being at EOS events, being active in the EOS community, and frankly, identifying the groups that held the same vision. I mean, at this stage, they're kind of, making an investment like the rest of us, of their time and their infrastructure. And so, they're the early supporters. Many of them were just people that I came across in the community or other team members did that we got to know that really liked what we were doing and wanted to support us. We're willing to put the resources behind it. And then other teams who identified it for their specialties, for their security expertise, for example, or their financial backgrounds. There's a lot of block producers, believe it or not, that came out of like fintech and traditional finance. And so we wanted to identify in the initial, 20 block producers that are joining our starting 21, that we had the right stakeholders to get this project off the ground, because they're kind of as much a part of the team as we all are in that way. And then we've got 10 reserve block producers that, again, we selected for their expertise, their support of the project, and what kind of enthusiasm and strategic partnerships they could bring to the table. Now, in the future, block producers will be added based on a vote between the WORBLI Foundation and the existing block producers to determine when to add more, and then selecting who to add based on the teams that are available out there. And again, who we think can bring the most value to the network, because it takes a special team to go through, again, the compliance, to be willing to be subjected to audits, financial auditing and stuff like that in the future. So it was kind of just a lot of teams approached us, and we just tried to select the teams we thought would be best for the chain.
Yeah, that makes sense. I mean, again, it comes back to that heavy level of compliance, and some teams are going to be willing to do that, and some aren't. Some will be able to, and some won't. So, it does get a lot more strict there. What's this like? How's this play out as far as what's this enable for Dapps and financial services? Because I know all of a sudden, if we have a financial institutions involved, we can do things like payment gateways, exchanges, merchant services. How do you see, what would be a real world example of, here's this DApp we can now launch and it'll run quickly and seamlessly, as opposed to going on EOS where we don't have this financial services backing?
Well, I think one of the interesting ones, I mean, what you mentioned are the obvious use cases, right? Banking, payment gateways, merchant services, exchanges, investment opportunities. Like we have investment banks that are very interested. FX trading. They have a real hard time moving money around the world right now, and it's very expensive for them to do so. So blockchain is very appealing. But an interesting one is insurance. And we've been talking to a lot of insurance providers, and they're dying to get into this space. They know there's, right, with all these hacks and all this stuff, there's tremendous liability, but they haven't been able to really get their mind around how to do the actuarial work, how to really assess the risk. Because when you're talking about, let's say Bitcoin, for example, and however many millions of anonymous users, how do you determine what people are doing, right? Insurance companies make their living because basically they'll tell you they don't make bets.
Yeah.
They don't take risk. Mm-hmm. They assess risk and they quantify it, and you pay. And what you're doing is you're pooling your risk when you're part of an insurance, policy with other people who require the same protection. And so if the risk is 1 in 10, they know they're going to pay out on 10%. And the other 9 just don't want to be one of those 10, so they're willing to pay into that pool, right? But on blockchain, they say they've had a tremendously difficult time because, again, they don't know who they're dealing with. And assessing risk is kind of knowing your customer, really. It is kind of KYC. I mean, who is on the blockchain? How old are they? What kind of behaviors did they get engaged in? They could never gauge their exposure. But now that we're saying, well, wait a minute, we'll be able to get some of that information, or certainly users who want to participate in insurance will be willing to give you that information now, and you can quantify it, and they're pretty excited. So that's a use case that is coming and we're in heavy discussions with. I think, some of it too is some really cool tools that I think are likely to be on blockchain anyway, and certainly could be launched on mainnet and probably will, but they'll be more heavily incentivized to come to market faster, like accounting softwares and tax tools. And because there's going to be this kind of ecosystem popping up, right? And it's like, when an industry pops up in an area, there's always ancillary services that industry requires, right? Like there's tons of people in Hollywood, California that make money off of Hollywood that aren't actors and actresses and directors, right? They're legal agents and they're talent agents and they're restaurants, right? So I think some of these other, startups are going to come along maybe a little faster because they'll see that there's a customer base a little sooner than they thought too.
Yeah, and it sounds like there is this there's this opportunity also to now, say you wanted to accept EOS tokens or WORBLI tokens or Bitcoin or ETH or whatever, you can accept this into your payment gateway and quickly transfer it to fiat, so that you're going to de-risk some of the taking payments in cryptocurrency for the financial markets as well, or for more institutional entities, because that's something they're
yeah. So you're not going to have to look. A lot of the way I think the industry tried to solve that to this point is stable coins, right? USDT is the famous one. It's like, when you're a trader on an exchange and you want to move to the sidelines because you're a little worried about the volatility of the market, or you think there's a lot of downside and you just kind of want to move to the side, or you want to just take profits for a while, maybe reinvest them back in. And we know that right now, if you go all the way to USD in your bank account, it's a long journey. It's going to cost you fees, and you're not sure that you may not want to be back in even in a week. Right? You might just want to be on the sidelines for a little bit. You see a dip and you want to ride it out. You want to jump back in, whatever that is. And so USDT or other stable coins have popped up to fill that niche. But when you start talking about being a merchant, right, you still really can't do anything with USDT. As a merchant, like that might buy you some time. So you could take a bunch of payments and convert it to that, or maybe you'll even accept USDT and, a blockchain person could take their Bitcoin, turn it into USDT, and then make a payment. But one way or another, we're adding all of these steps. Well, everything takes time and money. Every step causes what's called customer friction. Whether it's the merchant or the actual customer, there's friction. And always businesses want to eliminate this friction. And blockchain eliminates friction in some really cool ways as far as its speed and the way it can move information around securely. But we're not able to capture a lot of these things because we're missing this very fundamental economic process, which is payments and how to get them into something usable. And until we live in a world where you can just use, the merchant could just go ahead and use that Bitcoin to pay their rent or pay their people or pay their, vendors, their suppliers, that's not very practical. They need to go to fiat. And like you're saying, they don't necessarily want to be speculators, right? And you don't want to wait for Bitcoin and then 2 days later have 20% less money. That could be your margin, right? And that's evaporated. So, but if someone's able to convert and take that Bitcoin payment for you, and at least cheaper than MasterCard, for example, where you're doing credit payments, which is about 3%, maybe 2% or 1.5% if you're a really big volume business, as long as we can do it cheaper than that and it turns into USD, merchants are going to be fine. I mean, I think you'll see crypto adoption take off. So why wouldn't they accept it, right?
Yeah, exactly. And that's a great point. It's so like if a merchant's operated on 20% margin and Bitcoin's bouncing around by 20%, they could be giving stuff away for a couple of days from their store on accident, So,
right.
That's and to get to the kind of the heart of what WORBLI's doing and why this is such a big idea is because people don't care how things work necessarily. We do because we're deep into blockchain. And so, we're willing to go to USD Tether and be semi-speculators. We're willing to use Bitcoin or something as a payment and take that risk of it bouncing around 20% because we're basically interested in how the tech works. But most people could care less. And like I think that you said in one of your recent interviews, no one cares how the internet works. They want to be able to go onto Google and type something in and it magically appears in front of their face. And that's the only way that real adoption happens, because 99% of people could care less. So that's kind of what I see WORBLI doing, is putting this layer of trying to simplify what we have, so that now the financial institutions or these bigger players can come in and make it easy for everyone else to just use it and not have to think about it. And it's just such a big idea. I mean, you guys, this is one of my favorite, most ambitious projects on EOS right now, because it's it could make so many big changes. So yeah, really cool.
Yeah, it's a huge project. The other thing we're finding is that a problem for almost anyone in crypto has been just even getting a bank account, right? So it took us almost 3 months to get our first bank account, and that's not unusual, especially US, Europe, fair amount of the Asian countries. It's challenging because, again, the banks are concerned with, how do you know who you're dealing with? Like, we know you're upstanding guys, you've got your corporation, right? We know who Domenic Thomas is, we have all your information, but who you dealing with? You don't know. You're telling me you're in this cryptocurrency. Well, how do you know the guy sending you payments didn't launder that money, or is it involved in drugs or international financing of criminal activity? And the answer on a Bitcoin blockchain, for example, is you don't.
Mm-hmm.
I don't know that. So if I'm suddenly accepting Bitcoin, I don't know. If I don't know who that user is, I don't know where that money came from. But when we started talking to banks about AML KYC and the fact that we were going to have this on the platform for anybody who was going to be engaging in regulated financial services, they immediately were like, oh, wait, what? You're going to know, right? You're going to know who these people are. They're going through AML KYC. We're like, yeah, they're going through AML KYC. They were like, oh, immediately their entire tone changes, because they're just so concerned with this, right? Because there's this big boogeyman out there that blockchain's just nefarious, right? Unfortunately, we've gotten a lot of our rep from exchange hacks and theft and dark web, and so we need to change that narrative publicly as an industry. But part of it is making it simple, like you're talking about it, for users to come on and realize, first and foremost, that you can do more with blockchain than buy stuff on the dark web or speculate, because those are our use cases. And it's unfortunate, but we're trying to really change that.
And it takes out what it really does, you can take the financial system, the good parts of it that work really well, that are so seamless, and you can add this decentralization in the way that your transactions can't be monitored, or you just can't be, you can make your transactions, they can be seamless and flawless, and they can be trusted, and there's not going to be some sort of intermediary, but you still have all the other benefits of the financial system that we've developed for thousands of years. It's not all bad. A lot of people want to maybe just throw it out the window because we want to just have our own, we want to trade seashells again, but that's not that might not really be the case. So this is kind of that in between, where we're taking the good parts and making it better. So
yeah, I mean, that's really what we're trying to do. And we believe that what people really want is transparency, as you're talking about, less than pure decentralization, right? Because you kind of we're getting some feedback from what I'd call the decentralization maximalists that are going like, well, you're not decentralized. You're making the decisions on the block producer. Like, yeah, we are. And we have a good reason to do so. But at the end of the day, you're still going to know who they are. There's still 21 independent nodes. You still have the power of decentralization, meaning that it's distributed. It's a distributed system. If EOS New York goes down, we've got EOS Rio over here that's going to be fine, and everything's going to be cool, right? And EOS Rio and EOS New York are not in bed together. They're separate organizations. And if anything, we know more about our block producers than Mainnet does right now. And I know that'll change. And that's not a bash on Mainnet. They're going to get that worked out. I'm absolutely confident as governance comes along. But the point is, we do know who these folks are. We do know that they're, not in collusion and all of that type of stuff. We know they're separate, independent businesses providing a service to our blockchain. And we know that the transactions as a result are going to be fast and secure. And I think that that's what people really care about. And then again, the transparency, right? The immutable ledger, knowing that, they're not going to get ripped off, or that people aren't going to be able to hide, that the thing about financial institutions, if we're going to run into any friction, it's going to be some of these traditional folks who are used to operating in a black box and us saying, no. People are going to know how much is going in and out of your institution every day. You need to know that. They won't know who, like you're saying. They won't know that it's Brandon's transaction or Dominic's transaction, but they'll know how many. And if you try to go bullshit your numbers in the next quarter, that's not going to happen. That kind of stuff. Like, there'll be so much better corporate accountability if we can get these folks on the blockchain. That's probably going to be the stretch.
Yeah. And that's kind of the key for me and for people to really realize that our information, the individual person, our information has been out there forever. They know everything about us. So privacy on our end is kind of a joke. It's just a thing we dream about. So what this does is you take that as a given. We don't have privacy, but this enables us to now be transparent on both ends. Now we can see into the back rooms of the financial institutions. And so give up the privacy that we already gave up a long time ago and make it kind of transparent on both ends is kind of the take there.
It's like evening the playing field in a sense. Exactly as you're saying. They can't know everything about us and us not know everything about them. Businesses on WORBLI are going to need to do that. These are going to be one of the rules on chain, the transparency and that type of stuff. We're not going to let you come on chain and just leverage the resources of the blockchain or have access to the community as potential customers if you're not going to play by this new paradigm, basically. Yeah.
Well, cool shift. So we were talking a little earlier about the stabilizing. It gives this stabilizing effect for margins and for merchants holding fiat or taking payments in different ways. Another way that you're looking at making it more acceptable for merchants to use this is to stabilize the RAM prices or stabilize these other costs for companies. How do you kind of plan to do that?
So one of the things is that we've put aside RAM for account creation. And so user accounts are free. However, that does require AML KYC because it's the only way we can protect against the user Sybil attack, which is right. If you have to go through AML KYC to get that free account, you can't create 1,000 accounts because you're not going to be able to go through AML KYC 1,000 times. But it does at least provide that option. It makes it free. It makes it free for businesses to onboard users that already have a customer base. Because that's been a challenge for mainnet. As I'm aware of a few pretty large companies that wanted to migrate their user base onto EOS mainnet, and when they saw a couple bucks for an account, they're like, we got 1 million users. That's going to cost us $2 million just to open the accounts. Like, you got to be kidding me. And businesses need stable pricing, and I think mainnet's starting to adapt to some of that, and that's awesome. And we hope that whatever we're coming up with potentially can offer some innovation or point things in a direction. This will be the give and take of sister chains too, because everybody forgets that every sister chain in the EOS community brings in new developers. It brings in potentially new businesses that chain, is going out and trying to recruit new Dapps. But it's building the developer ecosystem and it's building the user base. But then it's also like having a bunch of research projects going on simultaneously with the same research subject, which is the EOS software. So like we have an entire security team that we're paying above our normal block producer fees. It's a couple of block producers and it's going to be some third-party firms to do security testing on our mainnet before it goes live when we take changes in the EOS software. And so anything we find, of course, we're going to, communicate that right back to the block producers on mainnet. And most of our block, we have a lot of crossover, so it'd be very quick. If you think for a second, again, EOS Rio or some of these groups who are known for doing security for mainnet, they see something additional through their WORBLI testing, they're going to be bringing that right back. And so we're all going to benefit from this immunization of all the chains and all the innovations over time. And I think the RAM is, the way we're doing it is it's in the token. If you stake 1% of the WORBLI tokens outstanding, you get access to 1% of the resources. Now we have some additional innovations that we'll be announcing in the next couple of months, but we have a pretty cool way to free up the resources of the token and still maintain the speculative value in the token price. And so again, but we're always striving to just be about stable pricing. Businesses need predictability. That's just bottom line. They need predictability.
Are you planning to have some of the other kind of features that we've seen with the EOS IO blockchain, like staking or renting out your tokens, or any of that, or the RAM speculation? Okay.
Yeah, not the RAM speculation. There'll be no speculation on network resources at all, RAM, CPU, bandwidth, none of that. It's all going to be stable priced, driving it down as low as we can get it. And then we have talked to Chintai, and they're planning on launching a version of their leasing platform on our chain. So that'll be available. And again, we're financial services blockchain. We expect a lot of people to come up with some cool stuff around the token. People have started talking about derivatives, and there's going to be a lot of different ways that you as a token holder might be able to leverage your tokens for some potential financial rewards of different kinds. I mean, and again, those will be compliant products that people will produce, and hopefully those same things will be available to mainnet people. I'm sure if they come up with something that works for WORBLI, they're going to do the same thing for EOS, right? Mm-hmm. So you'd be able to do the same thing with your EOS tokens that you can with your WORBLI tokens.
Can you tell me a little bit about the WORBLI Network Fund and what the plans for that is, or what that entails?
Yeah, so that's really will be the first opportunity for the community to kind of really start getting engaged. We'll be opening up a proposal process soon where people can submit for funding. We're not going to put a lot of hard parameters around it. We're probably going to make some early recommendations that will definitely favor Dapps, because it's in the best interest of the network in the early term to get as many Dapps launched as possible, or tools. They won't always need to be like a traditional sort of for-profit DApp, but if it's like a cool network tool or something like that would help the network. And in the interim, we're going to put together a committee, and it's going to be some people from the WORBLI Foundation, some of our block producers, and then some people from the broader community. We're going to try to kind of democratize that initially, and they'll be the ones making the decisions on which proposals get funded and how much, and doing the oversight. And then in time, I just brought in Todor. He's a pretty well-known guy in the EOS community. Todor is going to be joining the team as our kind of chief governance expert, and I'm tasking him to really build out the details of our governance in time. But we anticipate the WORBLI Network Fund being entirely community-run as part of our decentralization plan. So, we have a 2-year plan around decentralization of the network, where we want to decentralize as much as possible, put as much in the hands of the community as we can, to the point where I'll be able to be voted out as CEO by the community at that point, if that's what the community thinks is the best choice.
Okay. Yeah, I didn't know the full scope of that plan. So you're planning, so because it's starting out, I mean, it needs to be at this point kind of have a strong central leadership where you're bringing in the correct block producers, building the right team, but over time you're planning to kind of give this all to the community, almost like how the EOS blockchain, are you planning to go all the way to that level with the EOS blockchain where it's
we're still trying to figure out sort of how far you can go. I think the trick is, and we need mechanisms that ensure the compliance can't be removed. So you have to be careful with governance. Like if the community, so to speak, can vote on everything, we could almost get like a new kind of attack on our chain, which would be like a community voting attack. I mean, I don't know what you would call it, but where if someone wanted to come in and destroy the chain, they might vote out the compliance or something. So that has to be baked in, and we have to find a way to do that. But at the same time, the community has to be nimble enough that, let's say a new compliance standard develops and AML KYC is no longer the game, right? The global game in town, and there's something new. They have to be able to kind of vote that in. So there'll be some intricacies around that, but the gist is make sure the compliance is in place so that businesses don't get freaked out. Because again, part of what I've told people on mainnet is even if we could have gotten mainnet to vote in all of this, let's just say We could have put in a referendum and a constitution. We could have worked with Block One in the community and said, we need compliant block producers. They need to go through these procedures. And then we need AML KYC at the user account level for those who want to engage, and X, Y, and Z. The community said, cool, fine, sounds awesome. That has to be able to stay, though. That's the other challenge. The community has to vote it in kind of permanently. It can't be something that moves, because you're not going to be able to get, for example, a bank to open a digital branch and put in all that time and money on the front end and development to build it, and then not know if 6 months or a few days even later that all of that could be voted out, and suddenly they're stuck holding the bag, right? So insofar as we can keep that stuff in place, yes, the plan is to sort of slowly turn the whole thing over. Have the community deciding who's going to be a part of the foundation, who's going to be a part of the board of directors, where the WORBLI Network Fund is going, who's going to be a block producer. You know, we're hoping that there'll be this sort of WORBLI verified block producer process eventually, where block producers can kind of submit and go through a process to get certified that they meet the compliance regs, and then they'll just kind of be put in a queue. And then the community can vote from that pool. And anybody can kind of get there, right? Can start up a block producer and just go through that process that the network's defined that puts them in compliance. We want to automate everything we're doing manually, basically, if we can.
Yeah, that makes sense. And that's a good point, that you can't necessarily hand back everything to the community, because it's funny calling it an attack vector, but that kind of a community attack vector is almost just a groupthink short-sightedness, where, oh, we want, we'd like the chain to do this so we can make more money this next month, but they don't have the grand picture. So there's almost like this needed some sort of core infrastructure to keep, or some sort of core team that keeps that North Star within sight, so that so WORBLI is still WORBLI, so that it can still operate with financial institutions. So that'll be interesting to see how you guys continue that balance there.
Well, if people think about like Bitcoin, right? There's still Bitcoin core.
Yeah.
And they weren't voted in at all. I was an early Bitcoin miner, and it was just this certain group that had gotten along and interacted with whomever this Satoshi figure is, and, learned the code. And I mean, many people say that the Bitcoin core team is probably some of the best blockchain coders in the entire world, that they're amazing at what they do. And so by every account, they seem like they're the right people for the job, but they're not really voted in. I mean, I suppose if the community turned enough and there was enough FUD that they might be able to get somebody from that team to quit just out of sheer grief. But there's no process for that. And at the end of the day, for the most part, they produce the code updates. And yes, the miners have to concede and all, update to the latest version. So there's a consensus model, but it's not fully decentralized. It's not this just everybody's voting on what the next code changes are going to be in Bitcoin. Right? That's not how that happens. It's not like a bunch of people from the community submit features in this democratic process, and then everybody votes on which features they want in the next update, right? That's not what's going on. It doesn't happen in Ethereum either. It doesn't actually happen anywhere in blockchain. So I caution people with the decentralization maximalist position to think a little bit about what decentralization really means and how it's actually been implemented so far.
Yeah. Yeah, absolutely. That is kind of the bigger picture with all of this is those overarching concepts, and philosophy is big, especially when it comes to the difference between decentralization and we decentralize everything is kind of this, kind of right. You hear people say that. It's like, okay, hold on. Let's go through the thought experiment on this one a little bit further. So, right. Yeah. So I had one more thing here that I haven't, well, you can tell me about. It's Gamma Bank. Can you tell me a little bit about Gamma Bank, what that is with WORBLI?
Yeah, so that's really kind of how the project started. Is as blockchain people, we were just talking about how if the right group of people just kind of can get in there and is willing to do the heavy lifting of compliance, that we only think that financial institutions don't want to give blockchain startups bank accounts and don't want to be involved in crypto because kind of they don't have to, right? They already have this huge market. They're already making billions of dollars. Why? What's the incentive? look at the total market cap, right? It's a rounding error for some of these multinational banks. I mean, $300 million or $1 billion might sound like a lot to us, but that's nothing. You know, that could be a month's transactions for some of these entities. So, you know, we realize that there's obviously a need and that it is the future. And these banks will get there eventually, but if someone could innovate on the front end and get it done, that they'd do really well and it would be really successful. And so we had been thinking about it for a long time and, you know, had made some models, but then we realized that, again, the compliance would have to be all the way to the chain. And so we were like, well, how do we get this launched on a chain where we know that we can rely on that? You know, we're going to go through all these hard yards to build a bank and get banking licenses. Like, wow, we're going to need a chain. And so that's how the project all got here. That's how the WORBLI network was born. We looked at a lot of blockchains. We came across EOS. We knew it was the best of breed. And so we set about building the network and then continuing to cook along the business model behind the bank. And then actually recently we decided that there was an even better way to do the bank. And then our original plan was like, go out there, get these Class A banking license, show regulators that we're legit, show regulators that it's going to be run on a fully compliant blockchain, that we're going to have AML KYC, that we're going to meet or exceed all of their regulations, and that crypto's not the big bad wolf, and that there's a way to do this. And then we might have to start in some of the smaller, less regulated jurisdictions and then work our way into like the United States and Europe, but that over time we could convince. And recently we realized that there's probably a better way to do it. And it is actually to kind of decentralize the components of a bank more. Because as you just said earlier, people don't really care how it works. They care that it does work. You know, they care about the usability of the product at the end of the day. When you go to deal with your online bank, you don't care what the bank does on the back end. You don't even know. You assume it's on servers somewhere. You don't know if they own them or if it's in AWS or where it is, but you know that they've got servers, they're connecting to the internet, and they're providing you with the software interface that gives you your balances and allows you to do what you need to do, which is mostly view your deposits, how much money you have, move your money around, potentially take out loans, and have a bill payment of some kind, whether it's through your debit card or writing checks or online bill pay. That's what you do. And so if we can create an interface where you can do that, do you really care what's going on the back end? And the answer is we think no, as long as it works and it does what people want. And so we're rewriting the Gamma white paper, and we're going to put forth a plan that decentralizes the components of a bank so that the entity doesn't need Class A banking licenses, is the gist of it. And it's still compliant and everything it does is legit, but it's not all happening in one entity, that we're breaking out each component into its own individual business, but bringing it together in a single user interface, single sign-on with all the security features.
Wow, that's great. That's fantastic. I am really excited to see this develop, especially because about people not caring how it works. The other part of this is that with WORBLI, account recoveries there, you can reverse transactions. It's this very comfortable, this blockchain that wants to give you a hug. It's like, this is going to be easy to use. You can do the same thing you were doing with your money before. You can even get it back if you lose it. And, but now you have blockchain and we're making it more transparent for you. So yeah, it's keeping the good stuff of money that people like and adding some positive features to it. So great stuff. Great stuff. Do you feel like there was anything we kind of glossed over that you want to go back and touch on, or, big picture?
No, I don't think so, man. It's always great talking to you. I love the like talking to you and talking to Matt from Costa Crypto. Like I just, I love talking to the folks in the community because we can just have a conversation really. And I know you guys prepare some questions to keep us moving so we don't all get like tangents, like my rant and rave about running through the jungle as a startup, right? That might be funny, but the audience is probably not as interested.
Well, I think that's the good stuff. I think that people kind of, they want to, well, for me, when I listen to podcasts or things like that, I want to hear kind of the interesting angles and what these people are actually thinking, kind of in an uncensored sit down and chop it up about blockchain. Because that's, it's a little bit different type of media because we've gotten so used to this 10 minutes and hammer your talking points out and try to make it exciting and sensational. But I think that a lot of people are kind of sick of that. It's like, you know what? Yeah, that's cool, but I didn't learn anything. I don't feel smarter after listening to that. And I don't know what these people are all about. So that's why I've kind of chosen this long form, sit down and chat, because I think it actually has some value that people are looking for these days. So
yeah, I agree. It's like, again, Matt from Costa Crypto grabbed Thomas Cox and asked him to talk about WORBLI, because he's been I've worked with him a lot. He's been a supporter of the project, and it was cool. But he did end up spending like at least 20 minutes of that time just talking about different aspects of governance, right? Because they kind of cued in. Matt would say, "Oh, WORBLI's kind of doing X little different." He'd comment on that, but then he'd talk about like what the possible pluses and minuses are different. And it was awesome. I mean, I learned a lot just listening to it that was very non-WORBLI.
Yeah.
Which was cool. And that's to me, like, I've never wanted us to do this sort of like just shill-based, almost programmatic marketing and PR where it's like we're just trying to basically manipulate people into thinking a certain thing. I want people to be attracted to the project because we don't just seem authentic, we are.
Yeah.
They can tell, right? It's not so polished and all that shit. I could do all that. We're smart enough. I could have had Sam prepare me a bunch of talking pieces and had Mitch do rehearsals with me for 2 or 3 hours this morning, and just get all elevator pitchy on you. But like when someone asked me to describe WORBLI, which I've done probably half a dozen times now in the last 3 weeks, I know I've said something slightly different each time, but it's all said the same thing. Financial services on the blockchain compliance, right? But I don't want everybody who might want to watch multiple videos to hear the same fucking 20 words,
Yeah.
That just sucks. Like you said, it's just bad for your brain almost, So
Yep.
cool, man.
Yep. And people are digesting a new kind of media now. That's why I started putting this out in podcast form. I've got the EOS podcast going now, by the way. I think you're the 20th episode. So
cool.
You guys are a milestone. But yeah, nice. I think now people can listen in their cars, and all kinds of stuff. So that's how I like to digest information. I like longer form, deeper, interesting stuff. So, and that's why I do this, man. I'm so curious. I just talk to people and ask questions that I want to know. So I think that, that aligns with the other EOS community. So, well, cheers, man. Thank you for coming on. Mitch, good to see you, man. Thank you for coming on too.
Thanks for having us. No, I think Domenic described it really well. Just like to add how diverse our block producers are and what they're adding to our project. I mean, I was just in London for the hackathon this weekend, and there was about 15 of our block producers there, and it's so great to just see everyone come together and really speak about WORBLI and what they're going to be able to accomplish. So it's really great to see.
Yeah, absolutely. It's cool that you guys, having handpick your block producers like that, they're almost like part of your WORBLI team. So that is pretty cool to go out there and meet, such a big, far-reaching team out at the EOS Hackathon. That's pretty cool.
Absolutely. All right, man. We got to jump to another one, but thank you so much.
All right. Well, cheers, my crypto friends, and we'll talk to you soon. See you later.
Thanks.
Bye now.
Bye.
The money is not the prime asset in life. Time is, and your time is just